This is one of the biggest mishaps and mistakes that people make when they want to transfer or change their principal residence into a rental property. So normally what I see happen is you've bought a house and it's your starter home, you've paid down the asset, sometimes mortgage-free, sometimes just a lot of equity built up, and you're ready to upgrade into a new home. You decide to keep your old home as a rental property, and then you buy a new principal residence. And what I often see is people walk into the bank and they'll remortgage, they'll access the equity out of the old home to purchase the new principal residence. What they end up doing is they end up deducting the interest on the old home, which is now a rental property. This is where the big mishap happens. That is not the correct paper trail in order to be able to deduct that interest on your old home or your rental property. If you look at the paper trail, what CRA will look for is what the purpose of the funds were for. So when you went to the bank and remortgaged that old property to buy a principal residence, you unlock the equity. The equity that you used and the debt that you used on that old property has purchased a principal residence. And when you do this, it makes the debt non-deductible. So most people do this. This is one of the biggest mistakes that people make when they're converting these properties. Essentially what you need to do to get around this is mind-blowing, and I think it's the most crazy thing that we have to do for CRA, but you need to prove the paper trail does not come out of that property and go into a principal residence. So what a solution is that you can do is you technically have to sell your own property and buy it back. And when you do this, it is compliant with CRA. So what a lot of people will do is they will sell the property, their old property, to a parent, because they trust them, with a promissory note. And when you do this, so you sell the property with a promissory note to a parent, you go to the bank, you get a mortgage, and you buy back that property from your parents basically the next day. This is the proper paper trail that CRA wants to see in order to make that first property and that full mortgage on that rental property fully tax deductible.